carrying on that trajectory, every year our team puts out kind of a top 10 list of things to think about. We're kind of in the early stages of Q2 as we record. Some of kind of the sales tax focused things that we've come up with are about, streamlining tax administration, SALT implications of transactions, buy, sell activities from a business side, choosing right automation, which we've just spent some time talking about, post-COVID audit enforcement, and then automation challenges. Any of those things, beyond what we've already discussed kind of resonate with you or kind of carry over into your own top 10?
Sure. Certainly streamlining tax administration and home rule enforcement is a big thing for me. Home rule, particularly, Colorado SUTs. Okay, it's come a long way, but it's not
Great.
the answer. It's not the answer. I get that there are states that the localities have the right to do different things. And, one of the big challenges with Colorado is not just the separate filing, but also the differing in the taxability. And there's so many people that get caught by that, and tying it into what we've been talking about with tax automation. A lot of these newer, smaller platforms don't realize that. And so they are setting up their taxability rules based solely on what the state rule is. And that's going to get you into a lot of trouble in Colorado. We've seen, conformity happen in Arizona. We've seen conformity start to really happen in Louisiana, that were two of the others that really allow that different taxability rule. I think Colorado needs to just get on board. And I know I'm preaching to the choir with you guys, but Colorado, shape up,
Right.
and stop making it so difficult. And certainly, if you're going to continue to keep separate taxability and separate registration and separate licensing and separate compliance, there's 2 or 3 cities that are refusing to come on SUTs at all. You know what? They do not get economic nexus. Forget it. You don't get that. That is a big, violation. I still think that even with SUTs, those locals should not be able to enforce economic nexus. And I know that that's a really big issue. That's one of the ones that we struggle with. How do you advise what to do with that and what are the risks? So we'll see. But now that almost everybody is on SUTs, I think there's a couple more that have agreed but not yet on. But it's certainly getting much closer. Now we just need the tax solution providers to start supporting SUTs so that we can actually turn that on for everybody. But I think that's probably one of the big ones. The second one is the transaction activity. We do a lot of due diligence. We have a couple of very acquisitive clients since 2020 that we have done due diligence for. So on that case, we were for the most part, doing the buyer side due diligence. So certainly being a little bit more aggressive on saying this is what we think the liability is, but also then backing it down to the practicality of it. So did we do voluntary disclosures all over the place, as a condition of the purchase? No. When did we? When it was really, really big, and predominantly when the seller was a foreigner, because we knew that there was no ability for a state to go after the seller in that case. But, I've recently seen some pickup. I talked to somebody last month, and it was a pretty decent size liability, and he really didn't want to deal with it, and the buyer said then the deal's going to fall through, and they're still trying to figure it out if it'll happen. But what I'm seeing a little bit more is some companies going, I need capital investment, or I think I'm 1 to 2 years from selling. Maybe I should look at this. Literally in the last 2 weeks, I've done 3 risk analysis. All of them were over $1 million in liability, with one as high as 6.
Wow.
And, they were the one with 6. It's a Puerto Rican company. They're registered in 2 states because that's where they had a warehouse,
Probably
but,
Florida and somewhere else.
California and New Jersey.
Hmm. Oh, I guess that tracks.
But then, they weren't registered anywhere, and they had a huge explosion of sales of what they do. Luckily, they haven't been in business very long. They've only been in business since 20 or 21. So voluntary disclosures aren't going to do a lot to cut off that liability, but just the penalty, being able to automatically get the penalty when you've got, four, five, $600,000 of liability in a state, that guaranteed penalty abatement sometimes is worth doing the VDA for, even if you're not knocking anything off.
Mhm.
Um, but certainly we're really seeing that. But what I'm unfortunately seeing, one of the ones that I just did that was 2.3 million. He late last year registered everywhere except like 5 states. I don't know why he didn't do those 5 states, but about 5 states he didn't do, and now we're stuck. And he's been in business for a while. He's been in business actually, I think, since 2015, maybe. So now, yes, are there some states where I can still do a VDA?
Mhm.
Yes, but not very many. And I just said to him, I said, I really wish you hadn't done that. And it really puts us as advisors in a real predicament of how do you move forward with those, and what do you do with it. And I don't know if you guys have seen that happening too, that they're coming to you just a tad bit too late.
Yes.
Yes, we see that as well. And we try to advise clients similarly to you, right? Where it's please don't run out and register. We want to,
Mhm.
we want to make sure that we know what those skeletons in the closet are and then go through a thoughtful remediation process.
Mhm.
But it
Right.
doesn't always work that way.
Yes. Yes. um but I do think that is something, that businesses really need to think about. They're not doing income tax right, but those earlier stage businesses, they might be in a loss, so it's minimum taxes that they might be subject to. But you know it's interesting. I'm also getting more inquiries from foreign businesses.
Yeah, we are as well. I think, we're starting to see, I think, a lot of the same things as you
Right.
guys are. And foreign businesses selling into the US and trying to understand what their obligations are. They don't fully appreciate our sales tax system. It's hard enough for the taxpayers in the
Mhm.
US to get it, let alone our, foreign taxpayers. Uh, so that adds a layer for them to try to
Mhm.
understand what their duties are and then also understand, okay, if I am paying VAT maybe in some foreign jurisdictions, then how can I layer in sales tax on top of that? Do I want to do
Mhm.
some kind of restructuring or structuring to make it better from a tax perspective or a more efficient tax structure? So we see that too.
Yeah. And the other thing that I'm seeing, we've talked about tax automation, quite a bit. I've been doing tax automation crazily since the 1980s, when I started in sales tax. So I've been doing it for a long time. I've seen a lot. I'm thrilled that there's a lot coming out, but I really think businesses need to not let IT completely drive those decisions, because IT doesn't know what the requirements are. They're doing, they're I've had situations where IT has already signed the contract with somebody, and then they'll bring me in to implement it. I'm like, it won't do what you need it to do. And they're like, oh, how do we get out of the license? So
You wait a
that's
year?
one of the things.
Like,
Yeah.
that's it?
Right.
Exactly, exactly. So there's some of those sorts of things. Um, but then the other thing is, some of the litigation that's happening with, economic nexus. We've got, the Wayfair 2 case in Colorado. We finally have an Illinois case, the Pet Meds case, that's challenging the constitutionality of Illinois' leveling the playing field. Um, have we seen the end of the South Carolina Amazon case? I don't know yet. I think we're waiting to see if they're going to appeal to the U.S. Supreme Court, because I think that was or do they still have the South Carolina Supreme Court? It has dragged on for so long, but that's maybe from a Amazon seller perspective, a case that has been beneficial to them. Now I can say, all right, anything that's South Carolina on an Amazon platform, you don't have liability for that piece of it. We had the Pennsylvania Amazon physical presence case come down positively. Obviously, we had them come down negatively in California, but we are starting to see some more of those cases that will hopefully, dig further into what Wayfair only grazed on with some of the other prongs, of complete auto and what makes a tax constitutional. So I'm excited about those to really kind of see what else is coming up. Um, and hopeful that it will help answer some of these questions that are out there. I think the one I'm most interested in is the Colorado Wayfair one. The is it Lone Tree?
Lakewood.
Lakewood.
City of Lakewood.
It was an L
Yep.
local. There's so many of
There
them,
are 71 home rule cities. So yeah, there's a few L's in there.
Yeah. I think that's going to really answer a really important question. And then I think the Pet Meds case in Illinois, answering, what is an undue burden? We have to do some of those Illinois returns as part of voluntary disclosures. And, my team, it's 10 hours a month to enter all of the locals for Illinois the way you have to do it, and there's no way to upload it. There's no way to import it. You have to manually key it. You have to manually add all of the locations at least the first time. And that to me, that's an undue burden. Let alone the constitutionality of it, that out of state remote sellers are charging more tax to a customer than an in-state seller might. And, we've got an old case, the Missouri Associated Industries case, that said that even if it's one customer in one locality that is overcharged, that is unconstitutional. And, this is happening all the time in Illinois. And so I'm thrilled, that case got filed in December. So we'll really have to, keep an eye on that. So those are probably some of the big things that I think are at the top of my issues to watch.
Do you think Illinois would ever kind of put in, or would maybe you don't know the answer depending on what the ruling is, like a consolidated remote seller rate like Texas or, Louisiana or Alabama, kind of like a simplified streamline rate? Or is it just we're going back to just out of state 6.25 and it's just the flat rate?
Yeah, I don't know that they will, because technically, that's what Missouri had. They had a flat rate for out of state sellers, but there were cities where because Missouri is an origin state, just as Illinois is. And so that meant that if there was an origin city that had a lower rate, then the out of state business was charging a higher rate. So I don't know that they will do that. Interestingly, there's legislation pending. It hasn't moved, I do not believe, to make all out of state sellers. So it wasn't even that all out of state sellers have the same rule. It's only remote sellers have this overly burdensome. So if I've got a seller that has a remote employee that lives in Illinois, they may only have to collect the 6.25% state rate, because they have physical presence in Illinois, but all of their selling activities, which trigger what local rate to apply, and if their inventory is outside of Illinois, they only are collecting that 6.25% rate. And so what ends up happening is you've got, first of all, the complexity of, am I an out-of-state seller, and am I an in-state seller, or am I a remote seller? And when you switch between those things, so the example we talked about before of, I've got an employee that was in Illinois, and I had this happen with somebody. They had an employee in Illinois. That employee left. It wasn't that they moved, they literally resigned. So they no longer had physical presence. So now everything changed, or vice versa. Somebody that had somebody move into Illinois, and now all of a sudden they get the beneficial rate. So there's just a lot of complexity with that. So Illinois has a bill pending that would make all out of state and remote sellers now do destination sales tax. And I think they think that that's going to solve their pet meds issue, but it just makes it bigger because now it's so many more sellers that are going to be in that same situation. And the only way to fix it is to stop being an origin state and make everything be destination sales tax. And then the rate that any customer is charged, regardless of who is making the sale, will be the same. But they're not going to do that because there are certain cities that there are, big facilities in the city that generate so much tax revenue to that specific city because of the origin basis. And those in-state municipalities don't want to give up all of that tax revenue because they're more industrial locations, and there's no destination sales tax that's going to come to them. And so that's why I don't see that happening, but that's how it needs to be solved, unless they go back to it's only the use tax rate.
Yeah, that's very interesting. Well, because I remember when Illinois did that, I reached out to you. I was like, I don't even know what my client is. Like, I
Yeah.
can't figure it out because, right, they do have physical presence. They have a human sitting at their desk in Naperville,
Mhm.
but that's not a storefront. They're not selling from there.
Mhm.
So what rate do they at? Like, are they actually a
Yeah,
remote seller if they're physically
they're
present?
not.
And so
Yeah,
it's
they're an out of state.
still
Yeah,
subject to
there's a crazy flow
6.25
chart.
and
Yeah.
I think, yeah, I looked at the photo. I was like, I still don't understand, but I'm gonna go back to my own like Colorado little mess and leave Illinois to the birds. I left Illinois 20 years ago. Haven't been back.
Yeah, it's a challenge. It's a challenge.
When do you think, or where is that in kind of like court proceedings? Like, are we gonna get an answer from like a first round anytime soon? You think?
No. I talked to the attorney, and I think he's hoping that it'll be briefed by the end of the year.
Oh my.
Okay.
Yeah. So I don't think we're going to know anything until next year at the earliest.
Okay. See, everyone, watch out for Illinois.
Yeah.
Slowly. Anything else happening in your home state other than that, or is that kind of like what's taken up a lot of the airtime?
Yeah, Chicago is certainly, an issue. We are seeing some audits picking up for the city of Chicago, particularly for their non-titled personal property lease tax, which is the tax on SaaS and remotely accessed software application sorts of things. Unfortunately, we had a person in the legal division that was really reasonable, and he retired. And so we're starting to now, have to deal with learning new people, and that they maybe are not quite as taxpayer. I don't know that I would go so far as to say they have ever been taxpayer friendly,
Amenable.
but they amenable. Maybe that's a good way to say it. Yeah, Meredith, that it's, somebody that at least listened and you could trust. And, I've done a number of letter rulings to the city and gotten, some very favorable decisions out of them on some things. And, but now it's goofy things. Like, we're dealing with a client that is registered, they collect the tax. In order to claim a lease for release exemption, so they are acquiring software from somebody else that they're going to release, they charge the lease tax on it. You can't just issue a normal resale certificate. you have to get a certificate that is issued by the city. And when the city does it, even though we have been collecting consistently, the client forgot to go get the updated annual release certificate. So when the city issued it, they issued it as of the date that we requested it, not the fact that we had a continuing license all along.
So now you have this like
So now the
6-month
supply
window of not technically having your release certificate.
exactly. And so we've got a supplier that refuses to take the tax off because the certificate is dated as of, I think we were like 6 weeks late. I think we got it in like mid-February, and this was an invoice from January or something. And and to me, that's administrative crap. I collected the tax. I've been licensed. You didn't suspend my license. Now, if the city suspended my license, yes, I have a gap there. I was not legally authorized to collect. But this was a paperwork mistake. So now we're trying to figure out, will the city reissue it with the first, the day after the date that the last one expired? Or, our other alternative is we pay the tax to the supplier, but then we take a credit for it on our lease tax return, when we file it, so that the tax isn't being paid twice. So, but that's just craziness. It's extra paperwork. No other place do you really have to do something like this, particularly at the city level. And it's a pain, but the city is starting to kind of get back into auditing. We're seeing a few more audits come up, and they're just nasty. They have a high interest rate. They are not very accommodating in looking at different alternatives. So if you are in the software business at all, and you're not aware of Chicago, you need to look at it. If you are leasing physical goods and you don't know about the Chicago lease tax, you need to get on top of that.
Yeah, we just wrapped a Chicago VDA for a SaaS company.
Yeah.
When what was tricky before is, some of the software vendors have they hadn't yet been able to put that tax on the invoice, right? They hadn't created that code to not tax Illinois, but tax Chicago it's a high rate. It's 9%.
9%. Yep.
And for, large $100,000, annual SaaS contracts, that's a decent amount of money for it's a 4-year look back, I think. Yeah, we've been seeing a lot more, now that like the software vendors are able to actually put the tax on the invoice. We are doing a lot more VDAs and making companies aware of it and filing it. So that's good to know. Do you think some of the audit kind of activity has to do with, having a few years under their belt of the economic $100,000 threshold?
I do, because they came out
22, 21 with
I was
their
going to say it was either 20 or 21. It wasn't 22.
Okay.
And announced a $100,000 threshold for sales, or really leases, into the city of Chicago. So unlike the Colorado locals that say if you have it for the state, you've got it for every locality, Chicago, at least, and I will give them kudos for that, said you have to have $100,000 in the city of Chicago. And so, yes, because they do have a 4-year statute, that is definitely what is driving some of that increased audit activity now.
Okay. We could talk for hours and hours and hours, and we'll probably continue this conversation at IPT in June over maybe some beverages or something. But so to kind of wrap, is there anything that, you want our listeners to really think about, walk away with, really kind of like drive home, a point when it comes to just sales tax and how it ties back into like what you all do, and, being able to help just taxpayers get it right and educate the masses?
Well, I think probably the first thing is ignorance is never an excuse, right? If you are in business, you have an obligation to know all of the laws that apply to your business. And a lot of companies say, well, I follow my manufacturing rules or I follow my retail rules and I follow employment rules. Why do I also have to file tax rules? Well, you do have to follow the tax rules. It's another aspect of being in business. And so ignorance is never an excuse that we can reliably get abatement of penalties and stuff on. It's getting harder and harder to do that. And so I think being aware of what you're doing and getting professional advice sooner rather than later. I think there's a couple of key things that I would say if you are in the digital space at all, that is where there is so much complexity that you really need to be talking to somebody at the very beginning, because there are things that you can do with structuring contracts and structuring your marketing and all of that will help make your products be classified appropriately, rather than inappropriately. So many, SaaS companies I know, they pull a generic software license agreement off of the web somewhere, and it talks about things specific to a licensed software product that is delivered, and SaaS is not. And if your contract talks about concepts with software delivery, you know what? The state is going to class it as software. It's not going to class it as SaaS or an information service or whatever you think it is. So definitely making sure that you're doing that sooner rather than later. And then I think my other big thing is this is not a US only issue. This is a global issue, and the other countries have much lower, if not no, threshold. And so, depending upon what you're selling, if you're selling digital to end consumers around the world, you have collection responsibility on sale one. And you know what? Those registration obligations and compliance costs are significantly more expensive than they are in the US. I just got a quote, from our one of our partners, and to file taxes in the Netherlands, which is the country that they need to file in, it's $700 per return. Okay, we've got people complaining about 35, 40, $50 a return.
$100 a
You know,
return seems like a bargain.
$700 for a one return. Now they're quarterly for the most part in Europe, not monthly, but $700 to do one return. Why? Because the countries all require you to have a fiscal agent, which means kind of like a registered agent, but somebody that is actually financially liable for your taxes if you don't pay it. So you're paying a premium to have somebody in country manage all that for you. And I've got a new client that their operations people said, we're just going to make our products available for sale everywhere, and they're shipping physical product all around the world, and they got caught by Australia. And because Australia has, if your product is below a certain price, and this is common in Europe, your product is below a certain price, you have a collection responsibility on sale one. And people just don't realize that. And so I think that's the other thing that I'm really trying to stress is, you know what, the US, we have the complexity of all the states and the localities, but I'm actually more worried about the foreign, and it's much harder. And a lot of foreign countries, you can't start collecting until you're registered, and registration can take 8, 12, 16 weeks to get registered. So now you're delaying the ability to do business because you didn't think about asking about this sooner. So I think that those are the other two big things that I'm really thinking about.
Yeah, we'll have to touch base on the non-US kind of outbound transactions because we just had a
Mm,
call this morning with a kind of a VAT firm just because it's we're sales tax, US tax people that we,
Mhm.
we're trying to look to leverage because the registration is different between,
Yep.
EU countries, non-EU countries, but and then you've got customs customs duties
Yep.
and whatnot. And there's all of these
Yep.
extra layers to think about. And just, again, going back to kind of full circle is it's hard and there isn't a one-stop shop and there isn't a perfect answer. So let's try to
Mhm.
figure out the best that we can, for where we're at and try to learn and expand and do the best we can to do the right thing.
Exactly. Exactly. And, we have a webinar coming up on VAT, on European VAT. And we're going to do one in the fall about Canada. And we did one last year on Puerto Rico. So, we at the Sales Tax Institute recognize all that and are really trying to now start to educate people about all of that. And we have a lot of foreign participants, particularly in our Jumpstart class, that participate because they're the inbound to the US. So they realize that they have to start worrying about that. So we've really picked up on the number of attendees. Stacy, you were at our advanced
Mhm.
class and we had a gentleman from
I
Japan,
know. Yes.
um,
Yes.
who
Which
is a
was great.
consultant and
Yeah.
exactly, exactly. So it's global. Commerce is global, and I think that's really the important thing that anybody going into business really needs to keep in mind.
Yes, well, thank you for that, Diane. Thank you so much for your time and your friendship. And, we look forward to continuing our relationship, with Sales Tax Institute and, you know, touching base with you. Hopefully we'll, get to have an opportunity to get together in June when we're all hanging out in the sun ish in San Diego. But
Absolutely.
yeah, thank you so much for being here.
Thank you. It was a pleasure chatting, and maybe we don't go another 80 episodes.
That's right.
Fair.
That's right.
Let's do it.
We'll get you back on sooner than later. How's that?
Okay, that sounds great.
All right. Well, thank you, everyone. And this has been another episode of SALTovation. Till next time.